Thank you, Liz, for putting the whole program together, and thanks for all the to all the panelists who have made time to come to the program today. My name is Simba Mukonzo, the CEO of Mukfin. Thank you.
So good afternoon, everybody, and welcome. Thank you for this opportunity. So agricultural risk is very close to my heart. As you would know, I work with agricultural companies globally and particularly in Southern Africa and in South Africa. And climate has been very, very challenging. And I don't need to go beyond the South African borders for everybody to know how difficult and challenging it has been in terms of a risk occurrence. We had immense floods in the KwaZulu-Natal area just over a year ago, and they were put on high alert and no flood cover available for the KwaZulu-Natal area. And just 2 months ago, we had immense floods in the Western Cape. In fact, it wasn't even 2 months ago, it was the 24th of September. And on the 7th of October, we had a reoccurrence of that. And the first word we got from the insurance market was their flooding will become a exclusion under the Western Cape if we have a reoccurrence. So that shows to us exactly where the climate change and where climate is going. Climate is a huge risk in terms of South Africa, huge because traditionally we were always worried about drought and sunburn, and you were able to forecast and prepare for that. So drought, you just drilled a hole in the ground, for lack of a better word, got out some water. We've got farms that have got 3 or 4 or 5 wells, and you were able to get water out and put it into a reservoir and continuously irrigate your crop, because farming requires irrigation, unlike most people's expectation that you're not going to irrigate crop. You have to irrigate crop to have proper crop size and export quality. So drought has been pretty manageable. Flooding and torrential rains is totally different. Those risks are enormous because there's very little you can do. Yes, you can prepare the grounds, etc. And I would love to send some photographs where you could see the damage that a torrential rain and a flood can do to the agricultural landscape where you're trying to farm. Bearing in mind that, and we'll get to that point in a little bit later, what are the exclusions under your standard policy? Now, back to just climate, big risk. You don't know what, and big uninsured risk. Sometimes uninsurable, but most of the time uninsured completely. The second risk that we look at as well is the ESG risk, because it's becoming more and more prominent, and it's linked to the environment and the protection of the environment and the climate risk. So for me, those are probably the most important risks that we face in the agricultural industry in Africa, in Southern Africa particularly.
Right, so we heard a little bit there about some of the things that she's facing. Junior, you're going to give us an overview from sort of a Pan-African view from the insurance perspective.
Thank you. Thanks, Liz. I suppose that's also one of the benefits of having an old man, because I can share a bit of history about the subject. I would like to look at it in terms of the main perils, mainly for crops, for agricultural insurance in particular. You're mainly looking at things like hail and frost on one side, and then drought or multi-peril, as we call it, on the other side. And in this sense, you are looking at either commercial farms or small-scale farmers. And why would one separate them in that fashion? The first two, hail and frost, maybe one or two others, you are actually insuring and paying and measuring what has been damaged by the peril. So if your wheat crop gets hit by hail, you need to be able to quantify what the yield loss is going to be based on that damage that you've assessed. And of course, each crop behaves differently. Each crop behaves differently also depending on at what stage of growth it was affected. So the big thing about this type of insurance, you need a loss adjuster who knows about the crop probably to the same extent, if not more than the farmer himself. Because then you should be able to quantify through sampling and what have you, and say to the farmer, it's a 20% loss, and convince him technically. You can't bring a motor loss assessor to a wheat crop. He probably won't even know the difference between wheat and barley, and expect them to estimate the loss. And then the second lot of perils, your multi-perils drought, you are actually measuring what is left. So if you're expecting 10 tons per hectare and you end up with 6 tons per hectare, you need to be able to measure that 6 tons and then compensate the balance, the difference. Again, you're talking about the need for an expert loss adjuster who can carry out this exercise to the satisfaction of the farmer, most critically. So, what has happened in this space? If I go back to when I started doing crop insurance in 1987, we had, in South Africa, we had 2 specialist crop insurance companies. They did nothing else except crop. And this was Centra US, which was owned by the cooperatives. It was a cooperative insurance company. They employed a lot of full-time crop loss adjusters, full-time. And these are the guys who went out and did the assessments. You also had Commercial Union Agricultural Services, which was an independent private company, but still the model was the same. Loss adjusting was the cornerstone of the business model. And then you had in Zimbabwe the Tobacco Hail Insurance Company. Again, it was owned by the tobacco farmers, the association. They had a number of specialist loss adjusters, but they also roped in volunteer farmer loss adjusters who would go and assess a neighbor's crop. But remember, it was their business. And during this period, these companies made really decent and good profits. And then we had in Zambia a multi-peril crop insurance scheme, which was subsidized by the state. It included drought. Even there, we, as the reinsurers to that scheme, we hired and trained 14 full-time loss adjusters to manage the program, and it was successful. What has then happened is, with privatization and competition, and a lot of shortcuts have emerged. I don't even know if any of these companies today have full-time qualified loss adjusters. In crop insurance, it doesn't matter what rate you charge. If you don't have proper loss adjusters, you will never ever make money. And I think this is where we find ourselves in most of the situations today. So companies are busy experimenting on the edges, but the core really boils down to expertise in loss adjusting. And that's why companies employed agronomists in this space. And then for the peasant growing areas, because loss adjusting, if you've got 300,000 small growers, it's not possible to inspect all those crops. We now have the parametric trigger type approach, which is really a way of trying to simplify the quantification process, but it's got its own shortcomings because it's not precise. One farmer next door might get compensated and his neighbor might not get compensated, or all of them might get compensated the same amount, and then this one says, but mine was damaged more than this guy, but we got the same amount. It becomes political. So a number of missteps has happened over the years, but in my opinion, the piece that has been lost permanently is the expertise around loss adjustment. And I have to tell you that process or procedure is for each crop separately. It's not the same for all crops. That's how specialized it's always been. So that's what I've seen over the years when we speak particularly about these perils in the agricultural sense. I think I'll stop there, Liz, as an opener, then we can take it from there.
Absolutely, Junior. Thank you very much. And I'm wondering also, obviously, we want to talk about how the natural catastrophes are influencing the market and changing. So, Lesley, I think I might invite you to come in at this point and we can talk about what you're seeing across the continent. So, Lesley, can I turn to you and ask you for kind of a Pan-African view about what you're seeing about the trends in terms of catastrophes across Africa? Are you seeing a sort of much more varied picture than in the past, or is it much as it was?
So thank you very much, Liz. And again, this is a controversial question, I think, for reasons that I will get into. Because on the one hand, when you think about this from a statistical standpoint, the honest answer would have to be that we don't yet have enough data to definitively pronounce whether the loss trend is worsening or not, because climate is a phenomenon that manifests itself over a very long period of time. However, that said, anecdotally, when you look at the last 5 years, there has been considerably more loss activity than we had in the 5 years before that. Just to illustrate this, maybe with a few examples. Last year in 2022, we had droughts in the Sahel, in West and Central Africa, in Eastern Africa, as well as in Southern Africa. Generally speaking, you would expect those events to be diversifying, and based on our model, it was a 1 in 200 year type loss. So again, if you're experiencing these losses that are happening at a rate that's much higher than what the historical loss experience suggests, then you'll be hard pressed to say that the loss trend isn't worsening. Then maybe just to add some additional points, I think that will be relevant for the discussion today. The way we are approaching our pricing at the African risk capacity is that we have started to utilize simulated data. So we don't only use historical loss data, but we also use now simulated or projected future data, so that we're not giving undue weight to the historical loss trends. The second approach that we have taken is instead of relying on 40 years worth of historical data, we did some detrending analysis, and we have realized that only the data from the last 20 years is actually relevant for the paradigm that we are in. So we have shortened the data series that we use from 40 years to 20 years. And what we are doing every single year is adding a new year of historical data and dropping off the old year. So then this allows our, forgive the oxymoron, it allows our historical data to be current. And then we add onto this, then the simulated data, so that we are giving a more realistic view of the risk today than we would get when we rely solely on the historical data. Thank you.
Thank you very much, Lesley. There's a couple of things that have come out of that immediately, and I'm wondering, obviously, Chalo, there was talk there about Cyclone Freddy, and obviously you probably experienced that a little too close to hand. And also, Sipho, I wondered if you'd like to come in and perhaps let Chalo talk, and then Sipho come in and talk about the data, because I know obviously Munich Re sits on a wealth of data globally, if not in Africa alone. So, Chalo, what was your experience? I mean, these cyclones do seem to be coming around more frequently and more violently, or is that a misconception just because we're hearing about them more?
No, thank you, Lizzie, and thank you everyone for being there. I agree that the frequency of cyclones in the Mozambican Channel have increased over the years, and they're becoming more severe. The West in the recent history has been Cyclone Idai. I'm sure you all heard about it. This was in 2019, and then before we could settle down, there was Cyclone Kenneth, there was Cyclone Anna, and the most recent being Cyclone Fred. And all these, the frequency of these cyclones and the severity is becoming quite heavy. The Cyclone Fred, if you followed the media, it was one of the longest lived cyclone. It lasted over 30 days. It came in, passed, went back to the sea, and then re-emerged. And for Mozambique, well, the devastation wasn't much, but it hit Malawi and the other parts, I think, Zim or thereabouts, quite heavy. So the way they are coming through, it is not the same standard, or it is quite varying. And it will be important to bring a lot more awareness. The Mozambican government has done a lot about the cyclone awareness. That's why on Cyclone Fred, the government was priding itself that because of the awareness that went about, the devastation was manageable, unlike in Malawi where it hit the most. So bring that into the insurance context, there is still a sense of denial among the insuring public. One happened to be the sugar estate, about some 200 km from Maputo, who did not have insurance for the crop, and that crop was underwater for more than a month. So that was a total loss. And you can imagine the way the sugar contracts are done. You've got forward contracts, and the mills are waiting, the potential buyers are waiting. So it was quite devastating. I don't know how much they're going to pay for that. Yeah.
Thank you, Chalo. Let's go with ladies first. Noku, do you want to come in first, and then Junior will come to you?
Okay. So I wanted to comment regarding the data, but I'm commenting as a farmer. So in Botswana, it's been a desert area. So it's been the easiest in terms of measuring when it's raining or when there's hail. The dates were almost precise. So we've got 4th, 5th generational farmers that in terms of data, insurance data, because of low penetration and low documentation. So obviously on the insurance side, our data is low. But for them, in terms of data, it's very rich, because we're talking about a great-great-grandson who's now managing that particular farm. So in terms of track records of what has been happening across in the last 100 years, those records they have and they keep. So what is a catastrophe for us in Botswana is probably in other territories, it's nothing. But what we've then seen in terms of how they get affected is they get affected in the sense that predominantly they would know this is the planting season, these are the dates that we have, but that data is no longer correlating with what is on the ground. So then you find that with the Met departments that we have, obviously they've got maybe 5% in terms of years of the data that these fourth generational farmers or fifth generational farmers have. So what then happens is I think what the previous speaker was talking about, that now that you've planted in the wrong season, and in Botswana we had never experienced a period where you go for 7 days and it's raining every day. So now you find that they know they were supposed to harvest at this time, but they're not able to harvest because they cannot enter the farms. It's so muddy. Maybe it's horticulture. It's so muddy for these farmers to get inside their farms and get the potatoes. And now the policies are probably the period of cover is probably lapsed, because 2 weeks or 4 weeks, 5 weeks later they want to harvest and they still can't get into the farm because it's muddy. So now this is new set of data that is starting to come up, and for us as insurers we're starting to say, then how then do we react to some of these challenges that are challenging this data that the farmers were holding dearly? That is very generational to them, that we're holding very, very dearly. So that's where we're coming from. And in Botswana, we do not have so much of the parametrics, but we do have like a government relief program. So some of these farmers now, you find that because of where you are located in your area, you are the only one that is affected, because maybe in terms of the altitude you are low, and now the drought relief only comes if it's a nationwide catastrophe or is affecting all the farmers, and it has to be declared by the president. But you are there, you have that particular insurance, but you can't trigger it because you are the only one that is affected. And the data that the next person has is completely different from what you have. So those are the challenges around the data that right now we are facing in Botswana.
Thank you very much indeed. Junior, you wanted to come in as well before Sipho. You will get your moment in the light, Sipho, just shortly.
No, just 1 or 2 points to add to the conversation. If one looks at the emphasis, it's mainly on the damage. That's what tends to be reported on. Whether you're talking of hurricanes in the US, so many billions of damage occurred following this cyclone, or so many dollars of this happened. But what is not made apparent is the role, let's call it human behavior. What do I mean by that? Let's take, for example, concentration of values. In areas that have traditionally been prone to national net cat. So in the US, rich people retire to Florida, everybody knows this. And houses in Florida are built of wood. So if you go back 50, 100 years, Florida was just full of water, and it's been drained and it's been built up, and more properties have been added in the route of hurricanes. And each time there's a hurricane, because of concentration of values, the damage, the quantum goes up every year. Does this mean, or should we blame only the natural perils or human behavior as well? Now let's come to South Africa. Sipho can relate to this. We had flooding in Natal, in the north coast. If you go back 20 years, Umhlanga was sugarcane fields. It rained, but it was just sugarcane. And these fields have been replaced by extremely posh and expensive properties. And quite frankly, some of them built on sand dunes, as the floods have actually demonstrated. And if you look at the floods we had recently, it's more a demonstration of a concentration of values in the wrong place. Thirdly, Zimbabwe, Harare in particular, also South Africa, particularly Johannesburg, we have seen a tendency to rezone what had been left unoccupied previously, because these were waterways. And now I'm talking land use planning. Whether it's in agriculture or urban, land use planning is a science. If it's known that this is a waterway, typically you leave it as a green belt. Go back today, Centurion Sipho. The golf course in that estate should never have been built because it sits right in the middle of a waterway. If you go to Harare, you got the so-called land barons who are selling these green belts for redevelopment and rezoning. And these guys get hit by floods every year because they say once a river, always a river. And then we blame netcats for this. I had a very interesting conversation with one of my colleagues, one of the companies I sit on. We're talking about ESG and what have you, and climate change. And the lady who opened up also spoke about flooding in the Western Cape. And there's a statistic that says since between 1900 and 2018, there's been 334 severe flooding events in the Western Cape, an average of 3 a year. So it's not new. The Western Cape has always been prone to flooding. What has changed is high value properties are now sitting where they shouldn't be. If I flip the argument in terms of human behavior to the other side, take Mauritius. Mauritius receives on average 11 cyclones a year, give or take. And these are the ones which end up also affecting Mozambique. But in Mauritius, in terms of building standards, your roof has to be made of concrete, solid concrete, by law. You are allowed only so many square feet of window, there's so many square feet of wall. And they've got a very organized national warning system up to level 5, which determines what the population must do as a cyclone is approaching. At level 4, you stay home. At level 5, if they find you in the street, they will arrest you. You will never hear of a property damage claim in Mauritius, regardless of the size of the cyclone. So I give you the other extreme. So the point I'm making is we have to be careful in isolating what the real issue is. If you take those properties of Umhlanga and put them on the coast of Mozambique, that cyclone would have led to a very big loss. At the moment, the beaches in Mozambique are not as developed. So, Liz, what I'm trying to illustrate is let's be careful in isolating what is climate-related and natural, what is man-made by human behavior, but what can also be corrected, as Mauritius is such a clear example by human behavior. If the Florida people did what Mauritius has done, there would be no problem with hurricanes in Florida, you know?
Absolutely, thank you, Junior. I think it's a very good point, well made, and it actually leads into a question that we had coming up, which was about underinsurance and whether whether insureds understand enough about what they're facing and what the costs would be should they have to make a claim. And I think there's something that Antonella talks about is about the fact that there are gaps in her policies, and she knows there are gaps, and she risk manages some of it, and some of it she can't. But I think she's a very experienced insurance buyer and understands her risk very well. And I rather fear that a lot of people are not necessarily in that place.
So risk transfer solutions are obviously very important when it comes to managing your climate risk. And that comes on and after you have done everything to prevent and protect your assets. So it's hail nets, it's wells, it's reservoirs to get water in, it's road management as well. Then you go and look for insurance. And what type of insurance would an agricultural business look at? So we can start right at the bare basics, and that's crop insurance. You know, you would go and buy cover to protect you from hail, from wind, from sunburn, from flooding, etc. And as we know, the cost of crop insurance is very expensive. It can range up to 6-7% of the revenue or the yield that you get, yield value that you're going to get out, depending on the scope of cover that you have, and your participation on those slips are extremely high. So it's anything from 15% per block up to 50% per block. So when you sit in front of your shareholder and your directors in a board meeting, you will say to them, we are insuring crop, but be aware that it's only from 30% up, and we've paid so many millions of dollars or rands to secure this crop. So crop insurance is the first one. The second one in terms of agricultural risk would obviously be your asset cover, and your asset cover is tangible assets, your pack houses, your buildings, your equipment, mobile, fixed, etc. And very interesting, and I'll get to that in a minute. If you imagine a farm, there are roads, there are dirt roads, there are sand reservoirs that have just got plastic lining on it. There are bridges that are constructed by the farmers themselves to get from point A to B. So those are the assets that we have insured. And then you have the marine cover that would probably tick in and close in when you harvest the product. So you've got crop before harvest, growing, you've got assets all year round, and then you've got the marine cover. Now, what are the gaps when one looks at insurance? So straight away, I can tell you the gaps are that bridge that the farmer has built and has probably been on that farm for 20, 30, 40, 50 years, that crosses from the one part of the farm to the other part of the farm, is not ever insured unless it's an engineered bridge. That dam that the farmer has dug out of the soil and placed his plastic cover on is never ever insured. The orchard, in its sense of it being washed away, is not insured either. So those are the kind of gaps. So you've got gaps under the asset policy, you've got gaps under the crop policy, and the marine policy will only kick in later. The question would be then, why didn't you buy business interruption cover to prevent you from the flood or protect you from the flood or the torrential rain? If you have a conventional, traditional farm, your business interruption only kicks in when you have picked the product. So you buy additional increased cost of working, you buy removal of debris. Those are the kind of extensions that an asset or risk fancy-wancy policy would grant you. However, those extensions are very qualified. So removal of debris would maybe be within 100 meters of the insured asset. Increased cost of working would prevent you from grading and bringing in soil to fill the ravine that's now completely washed away and you have no access to your field. Increased cost of working would definitely not include helicopter spraying, because now you've had a flood, you've had torrential rains, you're unable to spray your crop, and you need to spray your crop because spraying your crop allows you to kick out the disease that will infest your product as a result of the floods. You can't spray it because the tractor and the water pump cannot work because it's your road and your bridge and your access has been removed. So those are the gaps that we have under the insurance policies. And I can tell you now, from a South African point of view, the recent floods and torrential rains that we've experienced in the Western Cape have put a lot of questions on the suitability and the suitability of the cover and the triggering of the cover to protect the grower from these kind of risks, because I don't think anyone ever thought that we would need to go that far.
Simba, you've got your hand up there. Would you like to come in on this one?
Yes, thank you, Liz. Very interesting point raised by Junior there, and I just wanted to add on that in respect of human behavior, which is quite problematic. there's one statistic that I picked up, which says the low-income countries account for only 9% of world disasters, but in terms of fatalities, we account for 47% of the consequences. And I think the point is just to also try to drum on that point that there is, in as much as there is the climate issue and the increasing natural disasters, there is an element, especially if we now come to the third world part, and more importantly, aligned and linked to insurance, is the aspect of risk mitigation, in the sense that we are faced with all these events, but our response in terms of risk mitigation seems to be very low, and the consequence is that even though we are receiving less of the natural disasters worldwide, the consequences are much higher on the African continent and probably the rest of the third world. And while on that, the consequence on the insurance and reinsurance side is that we also bear a disproportionate impact in terms of increases in insurance and reinsurance premiums, as well as naturally the withdrawal of cover when things go south on the global front. So I think I just want also to support the point raised by Junior that we are faced with climate change risks, but in the midst of that, we also have to focus on what we can control. And my point here is that what we can control is risk mitigation, which we need to also put emphasis on.
Thank you very much, Simba. Sipho, what's your sort of response to that, and obviously bringing up the data points that we were talking about earlier?
Thanks, Liz. Junior's just reminded me of my first cyclone in Mauritius. When the whole building was shaking, I thought it was going to collapse, but nothing of the kind happened. So just to support what he's saying. And I was always told that there were no buildings in this area some 20, 30 years ago, but you see where they are. Obviously, the man-made concentration of values, I think, is still an issue over there. Perhaps there are three issues I wanted to touch on to Junior's point. I think the first one, he alluded to the skills on the loss adjusters front. And I think, to me, it's a much wider problem that we are having. I think in the insurance space, we are facing a situation where we have a lot of people like Junior who are exiting the market, but we are not getting enough young people coming into the industry. And that is actually feeding into the type of products that we are talking about, the type of measures that Simba is talking about in terms of risk management measures. So I think the skills issue is actually manifesting itself in a much wider way, and I think we will see the effects of that for some time to come. So I think if you ask me the risk that we are facing, I think the lack of human capacity within the insurance space is actually prevalent. And linked to that is the whole issue of underinsurance. I mean, if you were to look at the penetration, the insurance penetration in the continent, it is quite low. I think outside of South Africa, maybe the highest penetration we have generally is actually Kenya. I think it's 1.something%. Our big brother, Nigeria, I mean, it's actually 0.3%. So a lot of our people are not insured. So a lot of people, when you have such events that take place, would not be covered. I'm not surprised by the stats that Simba is actually quoting, because a lot of our people actually rely on the government in order to see them after such events have taken place. Is this something that we can do as the insurance industry? Perhaps not. I think Junior will speak to this. We need a joint collaboration sometimes with the states to make sure that we can have a solution to address such challenges. So the underinsurance is actually a big issue that we have. And we actually see it in the data, to your point, Liz. the data, I think Nokuthaba spoke about how rich their data in Botswana is. I was quite surprised. If you speak to other parts of the continent, this is not the case. I think you only have a few countries in the continent where you have such data. And I think to me, it's one of the biggest challenges that we have in terms of developing the right models. I mean, there are some countries that you just struggle to get data to develop certain products. So what then happens is you have the likes of the reinsurers like Munich making assumptions on what we think should be happening. So you find that maybe the insurance companies as well as the statistical organizations in the country don't have the data. So I don't think that we have well-developed models taking into account what is relevant for the different countries. What we then tend to do is sometimes we assume what will happen in Mozambique is the same as Mauritius, but I think what Junior was just saying just illustrates the point. The building codes in Mauritius are very different to what you find in Mozambique. So I think we still have a lot of challenges in the data. Do we have data at the moment? Of course, we do have data that we can rely on. And that is based on what I've just said, on the low insurance penetration. So is this something that you can really rely on? I'll leave that to everyone to ponder. But we are working on a very small sample of what the universe is. We have seen a change in the pattern. Again, we always like to say Africa is not one country. It's a conglomeration of different countries. So you find that in certain areas, flooding is now becoming more prevalent. So we are actually seeing flooding even outside of South Africa. We have a number of countries where flooding is suddenly now an issue where it was previously not. I mean, I think drought is well understood, but we are actually seeing the change in the pattern. And some of it is actually linked in the buildings that you are actually seeing in the countries being allowed. If I take, for example, Ghana. In Ghana, they actually allowed for certain factories to be built in an area where they knew that it was prone to flooding. What do you expect if you allow people to build in such areas? So it is bound to happen. So just to support Junior's point again, I mean, I think some of it is definitely linked to the laws not being properly enforced, or even a lack of understanding the skill set that by allowing certain things to be done, it will likely lead to negative consequences. So I think it's a conglomeration of a lot of different issues that are causing problems for us. But I mean, if you ask me, we need to beef up the skill set so that we can improve the gathering of the data. Even within the companies, sometimes they don't even understand the data that they have within their companies. So that is one area where I think we need to check up our action.
Thank you very much indeed, Sipho. Mulenga, you had your hand up.
Yeah, sure. Thanks, Liz. And I think one thing that sticks for me on this conversation is the issue of trying to understand frequency versus the severity of these catastrophes. And one thing that I picked from what Mr. Ngulube was trying to explain, going back into history and the trends that followed after history, is the fact that there hasn't been much change in the frequency of some of these events. But however, you'll notice that there's a huge shift in the severity because of the developments that have happened over the couple of years, right? The build up. So you've had a huge property development coming into Africa. You've had a very fluid type of movement amongst people finding themselves in areas that were previously not occupied by people. So that has also increased the impact of these catastrophes when they do happen. You had unconventional businesses that are now operating that never used to be around back then. So all these have been impacted, and it keeps building up and increasing the impact of these natural catastrophes. And I think the question then, and to maybe Sipho's explanation around data, is how predictable is the outcomes? How predictable are these events based on the data, with all these unpredictable changes in human behavior, with all these developments that are happening that the data did not foresee when it was being built up in history? And I think one thing that came out very large in the renewals for this year, and we're talking about treaty renewals and all those reinsurance discussions, was the fact that previously Africa was known to be a cat-free continent, but what's changed in Africa that has led for us to be categorized as a cat-prone continent now? And I think these are some of the issues that have been discussed by the speakers that have gone before me.
Thank you very much indeed. Chabala, does this all echo with what you're experiencing in Zambia, or are you experiencing something very different?
Thanks, Liz. And I think for us, we have a unique position. But first of all, before I speak, I just want to say I agree with what everybody has put in terms of the skills position we find ourselves in, the data issues. We don't have accurate data. Even if we do have it in some of our jurisdictions, are we using it properly? So it's a big challenge to us. And I think as underwriters as well, or even as countries, we do try to trivialize some of these things. But in my country, I wouldn't say we're very fortunate. Maybe we're just lucky for now. But we've seen things changing because of climate change. Even areas where we never expected things like floods to occur, they are happening. Those days, Junior will agree with me, or even Chalo. There was only one place where we knew there were floods. It was along the Zambezi River and in the Western Province. And the people would always move from lowland to highland whenever the rainy season came. That was a known factor. But now we've found other areas where this flooding is coming. But why is it happening? Obviously, there's a human factor to it, and the political factor, because politicians have taken advantage in order to appease the electorate. They'll make decisions that will affect the way the water courses should be going, etc., or where the developments will go. And that's what Junior was referring to, and that's becoming a big challenge. But we also notice, obviously, for us in Zambia, the predominant factor is drought. The rainfall pattern has changed. When I was growing up, by now we would have a lot of rain. I think Junior would also speak to that. Zambia, Zimbabwe, by now it would be raining like hell. But believe you me, we still haven't had our first rains. Maybe a drop or two here. Now we're having late rains. So even if you're talking of farming now, that bring hybrid crops, which mature quickly and all those things. So it's really impacting on us. On the commercial side, believe you me, nobody will give us capacity for drought. That is in my region. They will not give us capacity for drought. But what has happened is we've gone these parametric products, and at least for the small scale farmers, government is running a food input support program where all of us are created a consortium to try and assist them, and at least it's helping to mitigate. But it's only limited to inputs. Yeah, it's just for inputs basically. So that is where we are. But certainly, I think for me, cultural issues, political issues are playing a major role in the way we decide on how we manage the environment and deal with issues of food security in our country. That's my contribution.
Thank you very much indeed, Chabala. And I think it's worth saying that it's a global problem. It's far from an Africa problem. Overdevelopment. I think in the UK they said there's something like 100,000 planning applications have been approved in what were floodplains, and then the houses get flooded. So, you know, no surprise. Kwaku, what do you feel about all this? And then Anselmi, I'm going to bring you in, and I know you've got something that you want to share with everybody. But Kwaku, from your experience, are you agreeing with everybody that that human behaviour is playing a big part in this? And then perhaps taking it back to the insurance, are the insureds using insurance in the best possible way to help solve the problems that they might have created for themselves?
I think the most critical part is that we all have admitted to the fact that climate is changing, and people are also causing climate to change. So for that matter, you'd see that our human behavior, attitude towards almost things around us are changing. So typically you see urbanization causing flooding, and you see that most of it than not, I think our concentration now is more or less on flooding than drought and the other perils. So you notice that last year there was a flood in Pakistan. It was said that 50 to 75% of the flood was caused by climate change. So it tells you that in terms of size and aggregation of losses, I mean, you will get to a point where our economies may not be able to support the extent of damage and losses that climate change would cause to our environment. Typically, you would see that most insurance companies are looking at 3 major factors as a way to look at the risk managing part of flooding. And you would see that most of them are either what Simba said, having a situation where they are trying to find strategies to mitigate the extent of losses. And we also have adoption, which is also one key factor of risk management tool that most insurance companies are also doing. I think one of my colleagues also mentioned about education in Mauritius. So we have a knowledge-based expansion. These 3 factors are going to really contribute to the extent of loss and damages that we intend to envisage in the coming years, looking at how climate change is really affecting both economies. And for me, I think my major impact is on agri insurance, which I feel that considering smallholder farmers, their size of income they generate from their produce, I think they are highly affected when we have these climate changes, because then you realize that they might have like an acreage or a hectare which may get destroyed in one cycle season. And that means that they've lost quite a lot of income and revenue. And this is where insurance companies should come in. I think in Ghana, they've tried agri insurance several times. Agri insurance pool is even struggling to find a way to price agri produce and crop insurance in Ghana. So I think typically, because we don't have data, we don't have benchmarking markets that we can learn from, I think it has really caused the market to more or less withdraw their support for agri insurance, and therefore also flood insurance. Because typically, if you want to find a way to control your books in terms of losses accruing from or coming out of flood, you just may have to put in exclusions in your policy where they're saying that flood-prone areas are not covered in your treaties, and that is the only way reinsurers and insurance companies are trying to more or less clean their books, more or less. So I think years back in Ghana, when my colleague mentioned, I mean, there were areas that were known for floods, but then those were the areas you see the top car, Toyota will be there, Rana Motors, and these guys have money, but they don't want to move. And people didn't understand why these guys don't want to move from that area, because they can afford to relocate their plants, but they still found themselves there because they knew that insurance were going to pay for all those losses that would arise from flood. But over time, when they realized that nobody wanted to support them and no insurance company wanted to write insurance for that area, they started moving from there. And so I think we are not being lazy, but I think the best way for us to control our books is to more or less put flooding as an exclusion in most of our commercial businesses, and also see how best we can have a way, because I think at the point, Insurance Association in Ghana wanted to do a flood pool because they had noticed that the trend was that nobody wanted to write flood. So there were steps taken by the association to do a flood pool insurance, which I think is still on the table. But those are, I think, we need to do so that we can take off flood covers from our normal insurance product that we sell, then have a pool that would manage the losses in a much more technical way, and have data that would also result in us also being able to manage the risks which will come out of flood as well. So I think that should be the way to go.
Thank you very much. And Anselmi, if I can bring you in here, I mean, I'm wondering, I want to talk also, there's a lot of people in Africa who are uninsured. You know, you hear those penetration numbers, and there's a long way to go, isn't there? So are you also, I mean, what's your view on that? And are you sort of agreeing with Kwaku that there should be some sort of innovation from the insurers to help drive better penetration?
Thank you, Liz. I think the challenge of protection gap that we see, as Kwaku tried to allude to, he felt he will not be politically correct to say that insurers have been lazy to bring solutions that work for the African market. But it's the fact that the protection gap that we are seeing in the continent, and I'm happy that Simba tried to bring in the human part of it, because you have seen our discussion has focused more on the infrastructure and, you know, the economic part, which is essentially crops. But often we forget the human life component of it, which we were supposed to address it with some life assurance products, and also the health part of it. You know, when there is flood, when there is drought, what is the health impact to the people? And essentially, how can insurance come and help that? Now, if you look at the health insurance protection gap in the continent, it is running to about 84%. You go to life insurance protection gap, it is running to about 98%. When you come to the climate and natural disaster protection gap, around 85%. This is the Swiss Re study of 2019. So this protection gap is significant because of just one reason. The African insurance experts are running a conventional Western-based insurance market. So, I mean, there is flood, people are affected by flood. What should I do? I just put an exclusion on flood. But this is not what is happening in the Western market. You know, Junior was mentioning what is happening in the US. Always they have the cyclones, and you will hear billions of compensation which are being paid to the insured. And these people, they will always go back to this jurisdiction, and they will continue to have insurance. Here in Africa, you have agriculture insurance today. There is flood or there is drought, reinsurers withdraw capacity. And what can the players do? They'll say, we don't have capacity, so we cannot insure our people. Recently, I was in Zimbabwe, and Junior concluded his presentation with a sentence which rings in my head until today, that Africa is alone in the insurance business. I mean, this capacity that we have been relying on from the Western reinsurers is now is not helping the continent, and now it is used as a tool to somewhat disrupt and withdraw ability to protect the African market. The question will be, what is the African insurance expert do to address this challenge that is put on our door? We cannot continue to complain that the reinsurers are withdrawing capacity in these areas. As the continent, what are we doing? So we have seen how the Western market have brought in the insurance-linked securities, the likes of catastrophic bonds, for example, the insurance, the sidecars, for example, and these different products from the capital market too. And it has grown more than 200% in a period of 20 years. You know, from a 45 billion market to in around 2008, today it runs into 98 billion market, and it provides better terms, better rates than the traditional insurance market. Africa has a capital market of about $2 trillion US. This is a significant capacity which we could tap. The bond market is 50% of that, $1 trillion US. There is no one country in the continent that will be able to address the protection gap, especially from such complex risks such as natural catastrophe, on its own market, on its own capacity. It has to be a continental initiative. So we have to find a way to coordinate ourselves. Sipho mentioned an issue about capacity. Do we have technical capacity? We have all these training institutions. I'm from an academic institution, the Africa College of Insurance and Risk Protection. So the question will be, what are our higher learning institutions, our colleges, our universities bring to the market? And we as experts, what are we asking our education capacity building institution to bring to the market? Because these institutions are there, we have graduates, hundreds of thousands every year. If they are not addressing, if they don't come with the skills that is needed to by the market currently, what are we doing to change this? No one will come out to help us with this problem. It's as Junior said, Africa is alone. We have to find these solutions to these problems that we identify. We mentioned, for example, the issue of data now and again. Now the question is it true that we don't have data? Or data is scattered in different places? We have not collected it, coordinated, and the ability to analyze it. Even the little that is available, do we have skills to analyze it so that we can make decisions on this? The other thing that I want to mention is the global direction and how to influence the governance decision of our institutions. So today we have the ESG and the PSI, and you will see that the investment or the business which have affect the climate negatively, they will be penalized or taxed. But is Africa in a position today to say, you know, we can invest in clean, only clean energy resources, for example? Can we go do away with electricity from coal? We are not there yet. So how is the African insurance market prepared to provide capacity while, you know, looking at where Africa's a continent, our economy, where it is today in its journey and where we are looking to go? So you see the partnership of Allianz, which essentially will be very strict in terms of these climate-related issues. And then, so the question will be, how will Santam protect African investment? You know, when we are tasked with the ESG requirements, which are not realistic given where Africa is today in terms of economic development. To conclude, in the interest of time, I think there are three imperatives that we need to consider as insurance market. Number one, we have the primary role of ensuring that we are reducing the protection gap. I mean, 80% is significant gap. Our people are vulnerable. Can we create solutions, and can we prioritize leading sectors of our economy? Agriculture contributes on average 30% of the economy in the continent, but contributes only 1% of the premium that we underwrite. Can Africans experts create solutions that work for the African farmers, for the African people, for the African mother in terms of health insurance protection? Number two, on the secondary interventions. Now, the ESG will dictate that investment, which is a very significant role of insurance in dealing with climate change, should focus on adaptation initiatives. But Africa contributes only 3% of, you know, these global emissions, carbon emissions. So why should we contribute? What should significant portion of our resources go to adaptation, while we contribute only 3%? But the effect that Africa receives from the climate change is massive. So I will say Africa will think differently and think what we contribute and how we should allocate the resources. And I will say 97% of insurance investment should go into mitigation interventions, which may include, you know, finding workable solution for reinsurance capacity within the continent, tapping into the capital market in the continent and even beyond. And finally, creating solutions that are sustainable. You know, this capacity we have today and then the insurers remove capacity will not help the continent. So we have to find solutions that works and bring confidence to the people that we are serving in the continent.
Thank you very much indeed. I am really aware that we've run out of time. So I'm hoping that you're all happy to stay, because we've got a couple of hands that have pinged up instantly during that. But obviously I understand that we are out of time, and if you do need to escape, please melt away. But Junior and Sipho, you both put your hands up during that messaging from Anselmi. So Junior, do you want to come in? But as I say, if you could be just quite quick so that we can manage our time a little bit, because I think we do need to finish off in the next sort of 5 minutes or so.
I'll be very quick, Liz. I think just one or two comments. I refer to the Florida example. If you do a quick research, you'll find that most of the large insurers have actually exited the Florida homeowners and motor insurance market completely. They have left because they got tired of paying claims year in, year out for what I refer to as human behavior causes. The legislators are trying to come up with laws to try and address the problem. So it talks to, in my experience, I'm a farmer. I think that's important to explain. That's my background. And in farming, we deal with problems daily and we quickly find solutions. It's common sense. If you look at the issue of land use planning that I was talking about, it just doesn't make sense to continue insuring a property that is sitting in a waterway. It just doesn't make sense. Sipho, you'll remember the Toyota factory in Natal. The single largest loss in the history of the South African insurance market was the flooding of the Toyota plant. It sits right in the middle of a valley in a waterway, and it's the second time it's been flooded like this. So if common sense doesn't prevail, the water will not stop flowing into that factory, because that's what water does. So if you read the recent reports from Santam, Santam has started employing geocoding for all its risks and mark it against the 50 or 25-year flood line. If your property is below that flood line, they will simply not provide the cover, because again, if you apply common sense, that property should never have been built there. The city council should not have been authorized, should not have authorized that rezoning. It's also common sense that if your losses, when we used to do crop insurance, we never worked with loss ratio. We only worked with loss cost. The loss cost tells you precisely what percentage of your value at risk goes to claims. And in those days, it was 4.5%. And for hail, it didn't matter how crazy the competition was, but all the underwriters were sane enough to know they could never charge below the loss cost. It's common sense.
Thank you, Junior. Thank you.
So that's where I'll stop there.
Yeah, thank you very much.
So my experience in terms of insurer response on climate change, on flood risks, on flood occurrences, etc. We had a very small flood in the Northern Cape 2-3 years ago, and it was pretty easy to slot under that policy increased cost of just grading the road so that we could get access to the vineyards, repairing some of the irrigation, etc. It was a very, very small claim, $50,000 per year, perhaps. So we had no problem. But now when you start talking $300,000 to $500,000, then suddenly the small print is coming up and showing up, and insurers are obviously not responding. It is premature, and I would be very unfair to say that our claims have been rejected, because the floods, as I said, occurred on the 24th of September. So there are very few insurers that have yet to pay out, because the insureds haven't yet presented all their claims. But there is definitely a vibe in the tribe saying, well, if you're going to be claiming for your road, it's not insured. And if you're going to be claiming for a bridge, it's not insured, because bridges and roads on farms are uninsurable. So insurer performance is questionable, and suddenly you have a flood of parametric cover, self-insurance solutions, reinsurance obligations, where they're going, we'll cover this, but under this and that circumstance. So I hate to say this, but I always say internally within our organization, insurance is not the ultimate panacea. It comes with proper risk management. So my farmers have now said, yes, but what about my road? I said, well, if you tar your road and pave your road, then we will be able to include it under the sum insured. But if it's not paved or tarred or protected in some form from the flooding, then it would be very difficult for us to go to the insurer. So what do we do with a $150 million loss that is now not insured under the policy? Obviously, it would create a huge problem in terms of the sustainability of the farm, because you need to get from block A to block B. And that's a conversation that our board and our shareholders are currently starting to have. And it is as a preface of what is the insurer response going to be. I know that globally, we will find that there's an immense focus on climate at the moment, and particularly, I mean, the UN has got a so-called global heat officer, and we're talking about extreme temperatures, and we're talking about surface sea high temperatures and the impact that that's going to have on the environment. So again, I repeat, yes, we need to manage our climate and understand the impact it would have on agriculture, on human health, on ecosystems, on infrastructure, etc. And not everything's going to be insured. So we're going to have to find other solutions on how to protect these assets, and we can continue to sustainably farm.
Sipho, do you want to come in very quickly, and Mulenga, just to have a final word as well?
Yeah, thanks. I just wanted to probably stress a bit about this data issue, and probably just share our own experience and how that is actually contributing to the position that we find ourselves in. I travel quite a bit in engaging with different companies in different countries with a view of obtaining data. And it is very difficult to get data to enable you to price accordingly. And those that I think most of us would know, if you don't have proper data, what do? You actually go conservative. And what does that do? It means that the prices that we are charging for our products are probably on the high side because we just don't have the correct data. And that kind of worsens the situation, because here you are, you've got a situation of underinsurance or uninsured people that just goes worse and worse every year. So, and then obviously if the price is too high, people are not going to buy the insurance products. And then obviously the reinsurers are not going to plow their money in those type of products. So I would like to stress that it is quite important that we actually address the data issue, because it has a causal effect on what then happens in terms of the insurance penetration and ultimately on the capacity that is being deployed. If you ask someone in Japan now, Japan is quite prone to earthquakes. They have the data that will tell you to the nth degree about the possibility of actually making money or no money in Japan. That is why you find that a lot of people pour money into Japan, because they've got models that they can trust enough. So I think it would help our cause if we can actually address the data issue, because then we would address the underinsurance aspect, and then we'll be able to attract the capital providers into our market.
Mulenga, do you want to come in? And then Simba, I'll give you the final word and we'll close with you. Thank you. Mulenga, very quickly, please.
Thanks, Liz. I think I just wanted to sort of respond to Dr. Anselmi's remarks, and also agree with Mr. Ngulube around, the issue of the insurance market withdrawing capacity when certain trends are observed. I think this is obviously coming from the fact that insurance itself is designed on certain principles, and those principles have to remain steadfast throughout this. So even as we discuss the issue of providing protection, the protection gap, and how does the insurance market, closing that protection gap, we must also have at the back of our minds that not all perils will be insurable as well. So I think the question then, to modify it a bit, Dr. Anselmi, would be how do we get the insurance market to provide solutions for all those perils that will fall within the ambit of the insurance coverage definitions, and sticking within the principles of insurance. But most importantly, how do we then foster some sort of collaboration with other stakeholders that will provide or mitigate or close in on that gap? Because some of the perils, some of the risks will be outside the insurance market's principles, or what they're able to provide. So I think that's what I wanted to add on.
Thank you very much indeed. Simba, I'm going to give you the final word and then we'll wrap up. Thank you.
Thank you, Liz. I think a wealth of information in these discussions, quite deep, I would say. And I think if we had the benefit of having more time, I think we could actually unearth a lot of issues, and more importantly, probably a lot of solutions. But I would like to say the reason why we are discussing this matter is that we are faced with a real challenge. Climate change and climate risks are real, but in the midst of all that, humans are part of the problem, and humans are also part of the solution. And therefore, we would like to try and focus so much on what we can change. I think, as Junior said, if a river is supposed to flow in a particular direction, it will keep flowing. What we have to do is to work around the river and make sure that it doesn't impact negatively. One of the issues that I've picked up in a lot of ways is the issue around data that we need to probably access and make use of data in a lot of ways. Probably it's available and scattered, probably it's not sufficient, but we need to be able to make use of whatever data is available. The other critical factor of skills, I think, has been quite explained. I think it remains to those in positions of influence, those in positions of power, to see what they can do about skills. Definitely a very big issue in terms of loss management. And then I would want to come in with the dimension of awareness. I think general, one of the biggest problems is with or without climate change, insurance penetration in Africa has always been very low. It's very low, and one of the solutions to that is to work around awareness of the risks, awareness of the solutions. And I think we need to do more to conscientize our clients in terms of the risks, and also to invest more in ensuring that there is mitigation solutions that are rolled out on the ground. And it can come at the right time, as we are in now with the advent of digital solutions. I think we have a very rare opportunity to be able to accelerate solutions and deploy solutions on the ground. For example, the issue we are talking about now, if you are able to geocode, you are able to probably even extend those services to, whoever is selling properties, whoever is buying properties, let them be aware that where they are buying, there is an issue of floods, there is an issue of cyclones, and so forth. And that should even influence the buyer's behavior whether or not government is reckless or politicians are reckless, I think buyers who are more informed will end up making better decisions. But overall, I think a very good discussion. Our role here is to facilitate conversations and discussions, and what we would want to see is a continuation of these discussions offline, online, and in various platforms. Thank you so much.